The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. The Dow was up quite a bit, made a new recovery high. S&P didn't do that, and look what happens. One little itsy-bitsy tweet, and look what you get. Down 52 in the Dow at 26,088. The S&P, so let me just quickly show you. The E-mini just was up in the 29.14s, peak in the 2-minute chart, and then kaboom, down to 29.05. Now, these moves are so quick, and one of the reasons why I've been saying for a little while, it's not a bad time to be raising cash. It's not that the market couldn't go higher. It's just that it's become so much more selective. And what we've seen almost on a daily basis, if not every other day, maybe 2 days. Today, the IWM was much better than the Dow earlier on. Yesterday, the IWM, the Russell 2000, was flat. The Dow was up. I mean, this is a very complex market in that in the larger trend, the Dow has just been making higher highs and higher lows. It has not taken out its all-time high. Technical Friday, let's go into the different aspects. Let's go through this. I'll just run the numbers with the charts right now. You can see I have no choice but to call this peak leg C, because the high that was made in the 25,692 on the 7th of August came down, took out the left side low of the second, which is at 25,120. It went to 24,954. And then what happened is there was a gap up, and we've just been running upward. We went right through the resistance line. That looked like a peak G alternate count because the MACD was turned down, stochastic turned down. I still mentioned that they were in positive territory, but they had turned down on balance volume. Price comes down twice. We make lows. 25,805 was the low of the. What did I say it was? The low of the 4th of September. And 25,754 was the low of the 11th of September. And now we've just had 3 sessions up, and there's no way I can count this. This has to be called leg C. Now, so we've got a leg C. We didn't get the peak C I thought we'd get today, which meant that we could rally Monday for a leg D, and then we make some kind of a short-term chop. No, this is leg C. And at recovery highs, you can fail at a C, but all-time highs, you should not fail at a C. So I'm just watching this closely because I think there's just enough residual strength to say maybe a pullback Monday, and then maybe Tuesday we go to a leg. So peak C forms on Monday, and a leg D forms Tuesday or Wednesday. And then I think we become vulnerable again, even though the 26,616, the moment we get into the 26,300s, it's just a hop, skip, and a jump to retest the all-time high, and all the other indices have done that. So this is the situation as it stands right now. Did I know that there'd be a tweet today to say pullback coming? No. Did I expect some kind of a pullback later in the day? Yes, I did. Only because we're getting closer and closer to that leg D that I'm looking at, and then we're going to have to make some decision. We do have a short position. It is underwater. It is underwater a little. Haven't taken out the stop. We still have very tight percentage stops. But in the meantime, what's really important about this is that within the context of, let me just show you something really technical Friday. Let me get a little technical here. In the Dow 120-minute chart, we went to a leg D. It's still it's in contention to make this as a peak F, a Chapman 5. But what's really important, if you're looking at here we go. If you're looking at the leg D, going to, there it is, the D, If you're looking at the technicals, the stochastic, it's really strengthened at 88%. And the MACD is starting to flatten out, but it's still very strong. So I think there's just enough residual strength to make some kind of a nominal new high. I think 26,000 to maybe 20s, 30s, somewhere around there. And then we start to pull back next week. This is kind of the thinking I have right now. Let's get to the nitty-gritties. So the parameters to watch, if there is from this move, and I don't think it'll happen right now, if there is a sudden slide underneath 25,920, that'd be quite a dip. That's a 200-point dip right now. If there is, then I have to consider that this rotation is starting to run out of energy, and we might be looking at different sectors starting to take the lead, and we're trying to do that from our opening call subscribers. We're looking at certain sectors that might, not sure yet, but might be able to respond positively. Got that scratchy, noontime scratchy throat. All right, so SPX.X, here we go. The S&P 500 trading down 4.63, makes it a little recovery high. This is the gray leg B because it's underneath the peak D that was made at 2916.50, all-time high on the 29th of August. This is what's telling me that there's probably an arch formation that's unfolding in the daily chart. And the weekly chart has a peak F in it. There's nothing easy about this particular market. If you don't want to just be buying and holding, closing your eyes and saying, hey, until there's a major skyscraper announced in the United States, I'm just staying long. That's what I've said is part of longer term portfolios where, like college funds or something that you don't really want to be touching, but there's a good chance that if there's a new all-time high in the next week or two in the S&P at 2917, let's say, I have to consider that this has now become a Chapman instant restart. It'll become G/C in the new weekly chart, probably going to a D and going on quite a bit higher. There's nothing I can do about that. That instant restart is there. The MACD is suggesting to me that it's getting a little bit, just a little bit toppy, but no real sign, only because the histogram is shrinking, getting smaller, still very positive, and the stochastic's flat at 91%. So there's really nothing technically saying smash to the downside. There is something saying, hey, chop, 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 sideways action possible. Coming up, QQQ down 72 cents at 183.80. This has been one of the weaker rallies in the Qs, the Invesco QQQ Trust Series, the NDX 100. I'm watching it closely. Under 183, it's at 183.80. Closing under 182.70 will suggest, yep, another arch formation is forming, and a pop to the 186 level would be absolutely outstanding action. It's going to be tough to do. IWM, before we get to our little break, IWM holding okay, up 63 cents, up 0.37, much better than it was yesterday. Gray leg A, it's trading between 172 resistance and 170 support. I'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back, and the Dow's down 24, S&P's down 2.91. No big deal, but it's the suddenness, it's the rug pulls, the rug pulls that keep coming, and yet the market just wants to ignore it. At a certain point, there's going to be a exacerbation of the negativity, so that there is, in fact, a sell-off that unfolds, that closes at the low of the day, and then there isn't any buying because the next day there's the same sort of thing. And that's my concern coming up into the September-October period, that we will get some kind of, how can I put it? It's a geopolitical, economic, double whammy, triple whammy, and that's where we start to see exactly which sectors are holding the very best, and that's where we want to come into as soon as things turn around again, and which ones are highly vulnerable. That's kind of the way I'm looking at it. And here we go. The Chapman Wave, you identify after a decline, you identify the lowest low bar. There are different ways of doing that, and then merely count each successively higher peak to the fourth highest peak. That's A, B, C, D, the fourth highest peak. You can go E, F, and G, but D is where other things can happen. That's where you start to make decisions. So with that in mind, let me just show you. The IWM, a question I had was during the break, could this be a C instead of a G? A G is very negative. A C is pretty positive because they should still get a D. See the way the MACD is getting narrower and narrower. See the histogram, the little vertical bars are starting to shrink. They're still very positive, but they're starting to shrink, and it's getting real close to having the green 9-period differential, the fast-moving average, cross negatively below the slow-moving average, the red one. If that does in this M formation, that invariably continues for a little while longer. The stochastic at 89% says that there would have to be a slide in the IWM trading at 171.24, decisively below the 9-period moving average of 169.45, probably have to test 167.93, the 14-period moving average, to go from 89% to 78%, below 80%. However, that's just guesswork. At this point, it's at 89%, and that's good. So that's why I think the IWM is holding okay, but it hasn't got the upside strength. MACD weekly is not all that good. Now, the monthly chart still seems to be quite early in the big move for the second move up. So nothing wrong there. So it's this daily that's really going to be the key. And at 170.18, 171.18, let me just say the close below yesterday's low of 170.26 suggests that that long wick candle of the 12th will get tested. Just keep it as simple as possible there. Okay, gold. Gold trading down 7.7. Oh, it looked fantastic intraday yesterday when it was trading up at the 12.18 area. And I did the analysis, and I'll go back to that analysis. I did the analysis of the dollar, and I also said that within the context of the rotation through the different sectors, the dollar weekly chart is very close. In fact, right now is the first time the weekly chart has gone negative. It hasn't closed. It's Friday. It closed today. Since it crossed positive way back in March, the end of March of 2018, and the dollar was down in the 89, 80, 90.20 area, because the very following week, the first week of April, we went long at 90.07. It hit just about 97. It's pulled back. It's trading at 94.75, made a lower low today, and then had a nice rally. It went down below the left side low of 94.43. It went to 94.36. Now that arch formation says closing nicely above the left side low is one positive, but the MACD has to make its W formation. It has to turn up by Tuesday, Wednesday of next week. I'd say Wednesday next week, without holding a negative like this. And the stochastic really at 32% has to get to 38, maybe 42%. So that's the thing with the dollar. I think there's enough internal strength that I'm looking at based on the monthly chart for the first time. It's the monthly that's really giving good signals to say that the dollar should hold quite nicely, even though it is still consolidating. Now let's go back to gold, and I'll go through a couple of things. See, the gold itself at 1200, it's just within a range. It's in this range of 1190 to 1215, 1217. But wait a minute. It hit the 9-period moving average, and yet again, this week has not been able to close above it. That's at 1217. So this, to me, is very important because it's saying that the MACD flattened out, the stochastic weekly rallied quite sharply, and yet there has just not been price appreciation in gold just yet. Look at the GDX. The GDX is down a little bit, just down 8 cents at 1801. That candle that we're looking at, I'm exactly the same as what I said earlier in the week. I said, this is a very good candle for a turnaround, long-legged doji. If it's able next week to close at least 2 sessions nicely above the high of 18.42, this is the GDX, the gold miners ETF. If it's able to close above that, is great. For the first time, you're seeing some kind of follow through, but the stochastic at 10% has to get to 17% and then go over 20%. That to me is imperative. So what we're looking at is gold, the gold miners, gold itself, continuous contract, the GDX, silver. Gold is down 0.49%, silver's down 0.84%. And what I said is, I don't like the silver's chart at all. It's not nearly as, no, I wouldn't say as good, but it's not, it hasn't got the same characteristics of a potential turn that gold is trying to make in the weekly chart, because that is still a very weak chart. So silver at 14.125 has no choice. But within, by Friday a week, it has to be trading sharply above 14.38. The 14-period exponential moving average, it's got to tackle that ugly candle of the 4th of September, that 14.59 was the high, $14.03. 03 was the low. Man, that is ugly. It has to get into the high of that bar. Okay, enough with that. Let's look at high-grade copper. High-grade copper is probably down a little bit. Yep, down 0.03. Weekly chart, not that great. It's at 2.64. Let's go to platinum. I know some people like to look at platinum. I don't do anything with platinum other than pick it up once in a while. EFG, G/C is the weekly chart. Yeah, this time the platinum weekly MACD is actually trying to turn up. It's even gone to a leg B. That's the first time you've got to be in the weekly chart of platinum in a long time. So that's a good sign. Leg E to the downside in the monthly chart. And look, leg A, B, yep, it's just making a peak B in the daily chart. Platinum is perhaps a little bit better than the others. Still not a great looking monthly or weekly chart, but improving, much better. High grade, crude oil, up 51 cents. So I can't go through it. I don't have time right now because it is Technical Friday. There are a lot of things I want to do. But our friend Fred, who has been very accurate in calling a rally up until the 16th, today's the 16th, very good, congratulations, has said that crude oil should start to rally, and should start to rally quite sharply. Hey, I'm watching this. He's already got a lot of credit there for some good calls. Okay, crude oil at 69.09, up 49 cents. I got a stack in the rain.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So the TLT, this is the iShares 20-year Treasury Bond ETF, went down today to, I said to the subscribers, it needs to hold 118s, and it went down to 118.30. Peak E at 122.33. Back around about the 27th or so of August, and then comes down very quickly. Trough A, trough B, trough C, trough D, almost every other day. Trough leg E to the downside. This is going to be very important because at 118.65, within that context of the rectangle formation or the lowercase h going to a lowercase m, this is at 118, between 118 and 116, this is imperative to hold. And my thinking here is still that the TNX.X, which is the 10-year Treasury yield, this is the Treasury note, at 29.89, has just gone to a peak A, B, C, D. This is now the opposite, of course. So we've got yields, at least the 10-year, has gone to an A, B, C, in leg D right now as we speak. So my thinking here has been for a while that this is just stuck in a range, and it has been in a range, in a rectangle formation, but the narrow formation says 33.00% is the top side resistance at 2.990 right now, and 2.8 has been the key support. And that monthly chart has gone 4 months without a new recovery high. That's quite something. So the continuation of the sideways trading range for yields, I think, is going to continue. My thinking has been, as I said, if the yields start to come down sharply with the TLT rallying, that would probably coincide with the market pulling back deeper than just a brief 1 or 2 day pullback. That'll be a more sustained move. So that's kind of the way it is right now. Dow's down 43, S&P's down 5. And we'll go through usual questions. Question Boeing. Yep, Boeing up, I think, today. Yep, up $1.61, holding nicely in that cup, going to a double cup formation, just sideways, rectangle, if you look at the monthly chart or the weekly chart. So at 357 this morning, was up in the 362.20s. A very good action. Now it's come back quite a bit. So we'll keep watching Boeing. PPA I mentioned as going to a new high. That is definitely leg F in the monthly, well, could have recycled to a new F/B, but this is good action, and that the MACD has just barely stayed positive. It just refused to cross negative. This is a very unusual. I don't recall seeing a MACD in a monthly chart looking like this with such a flat 5 month. Yep, 5 month green 9-period exponential moving average, the differential, just flattening out slightly above the other one without crossing negative. Leg E in the weekly chart, and leg E is just formed in the daily chart, and that says, okay, now I'm going to be a little careful, watch this closely for some kind of a turnaround this coming week. And I am anticipating that this coming week I get the signals that say some kind of at least a short-term pullback is unfolding. And the question came in, are you still, you were quite confident that we would go under 24,000? Well, we did that for a moment. That wasn't really the issue. I still think that there's a good chance that this year we're going to go under 24,000 in the Dow. It's not a big deal. If you're at 26,000, 2,000 points down, 10%, 11%, I do think it's going to happen. So keep that in mind. The next question I had was Caterpillar engulfing, reversal candle. Yeah. So Caterpillar had a fabulous move to the upside from just 2 weeks ago. It was trading at 129 something, and then it goes up, peak A, B. This is only leg C. This is matching the Dow. This is matching the Dow, but it is way under the previous high. This can still fail because there's a gray leg C because the MACD. Oh, wait a minute. MACD. Oh, is that 85%? Yeah, this is a leg C, a blue leg C. It should go to a D. I don't know how it's going to do it, but I think the Dow will make that D. It's also in leg C. We'll see what happens. Caterpillar is important, trading at 144.36, up $1.18. It hit 147.20 from 130 to 147.20, 17 points. That's 11%. Very good. XLI, it's got an XLI. I think that's the industrial, S&P industrial sector. This is leg E, also leg E. We've seen that as well. Leg E in the weekly in the weekly chart. Sorry, leg E in the daily chart, at 78.75, up 7 cents, went to 79.13. All-time high was right there. That was the week of February the 2nd at 80.96. Not far from it in the cup formation. Amazing. Let's see. Question. XLR. Oh, two different people had XLR. Yeah. So I'm watching that. XLI becomes negative if it closes in the next week and a half under 77.50. It's at 78.78. Next question I had was, it was right here. Oh, we did Boeing, did Caterpillar, did UTX. No, I haven't done UTX. UTX, as I say, we're still long UTX. Oh, nice move up, $19 at 136.71. This is going to, I did a whole thing on Boeing, UTX this morning. I wanted to show some patterns, so, oh, that's a good coincidence that it happened right now. Is that it, UTX? Nope. Let me just find it for you. There it is. Now let me just bring it across, if I can. Oh, is that UTX? No, I didn't have it. Huh, interesting. Okay, so I went there. It must be this one here. Yeah, so UTX, United Technologies, I did this and I showed that there was a Chapman wave inside track down channel with 136.20 as resistance in the daily, in a cup formation, that there was a weekly left side, right side price time edge going to this week. Maybe it can go an extra week, but at least to this week to try to get to the 139s, previous all-time high, peak F in the weekly. And the monthly chart was improving. The 120-minute chart said it should go to a leg D today. So we still long a position, but we had an attempt early in the week to go long. We did go long. We just got stopped out, and then it turned around and went very nicely to the upside. So the UTX right now at 136.62, 136.88. It's gone through the high. It's gone to a leg C in the weekly. Finally, getting closer to the 139.24 high. This is very important because it is an important Dow component, kind of a benchmark for me in many ways. I like it, and it's acting very well. So, yeah, the cup formation is going to be very important. Doesn't have the strength in this move to test the 139s, but it's going to pull back next week back to the 134, 132 area. We'll see. Dow's down 51.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So the question here is, can I add to the dip in the very long-term picture of Disney? Diz trading at 109.42, down at 125. I'm going to suggest that if you're looking at it long-term, it's at 109. I would much rather see it try to test this slightly rising uptrend line, which goes from February of 2016 at 86. And look how perfectly it keeps hitting this red line. And that's where you want to, because your risk then is maybe 3 points. 3 points. I would even take 3% and make it 2 points, because if it takes out 100, it could quickly go to 97. So somewhere in the 105 to 102. Let's look at this again. I think that's where it's going, even though it's a peak C. All of this is gray because it's under the August of 2015, 122.08 all-time high. And just think about this. Disney, with everything that's going on, negative and positive, negative and positive, positive and negative, it's been stuck in a range between 122 and basically 90, let's say, for years. And you remember Walmart did that for a very long time, and then the rule of thumb was that rectangle should maybe have a chance to break once to the upside and then plunge. And you remember, I wonder if I can show you this now. Yeah, there it is. This is way back. That was, look at this. I'm going to squeeze this closer right here, and you'll see Walmart back in, I don't even know if I can go back. Yep, I'll try to go back that far. Look, Walmart back in, I thought it was 1999 or something like that. Let me just see. Yeah, that was it. The high that was made in December of 1999 at 70.25. It then created a sideways channel, a rectangle formation between 41 and the high that was made just straight afterwards went down, went up, and then retested. This looks exactly like the H pattern of the Dow when it made the low in February, rallied into the 25,800, and then came back and made a low at 23,340, I think it was low. Yeah, so that's the same. And then it went sideways for look, it went sideways from 2000, basically from 2000 until it broke out in June of 2012. But I remember looking at it sometime 2009, I think it was something like that. I said, this rectangle pattern is amazing because it's just gone on and on and on and refuses to break. And what happens is that when it's tried a certain number of times to break to the upside and it can't, it goes towards the lower end. And then, of course, it did. It went all the way back down to about the 43 level. And then when it broke out, even then it had to retest and hug that whole channel to say, oh, it was so quick to get out of here to 90.97, 20 points higher than the previous high of December 1999, that it came back, tested the 200-period moving average, and then ran higher. So I'm just saying, I think the pattern that I'm looking at now suggests that you could wait a little bit longer. It's a survivor, but at the same time, this pattern says, you know, the monthly chart, single leg A, is probably going to have to come back and do some testing, and that's the way I'm looking at it. Hope that helps you. That was Walmart. So Disney right now says probably going to be stuck in this range for a little while longer, even though they're lower highs and higher lows, making a wedge formation. I would wait for a test, get under the 9-period moving average, no, the 14-period moving average in the 106s, see if we can go below that, and then maybe you've got yourself a real nice rally coming up. That's kind of how I'm looking at it right now. Okay, next question. That's that. BKX. Well, the BKX is the KBW, Keith Brewitt, we used to call it Keith Brewitt Bank Index. It's trading. Now, let me just go to this because it's exactly the same. Let's go to the XLF because it really matches. You just keep looking, you'll see it's exact. The Select Spider Financial has not closed decisively either under the 9 or the 14-period moving average for a while. Stuck in a sideways range. The MACD's negative, stochastic's negative, histogram is negative. The weekly chart, MACD rallied. Okay, stochastic is at 83%. That's good, and yet the price is just stuck. So a nice move up today, 15 cents. It did hit the 9-period moving average, and then spiked over into the 28.26, which was the 14-period moving average. Now it's pulled back sharply. Just keep watching this. I don't see anything just yet. It might be that you should just buy and hold, but I'd prefer a little bit more of a pullback before I actually want to get back into the XLF. So I think we've covered a chunk of stuff. Will we get a code in the financials? Yes, I believe that'll happen, and it'll happen. The clue will be if history repeats, and Goldman Sachs was there in 29, IPO'd, I think it was March of 1929, and then had a fantastic run to the top in September the 1st, 1929. So I think, yes, Goldman Sachs should be there in any major move. So this is I'm looking at these different aspects, and I'm saying we're starting to build a scenario that says how these particular indexes, like the XLF, like, say, Goldman Sachs, like an IBB, which is at a fabulous run but is now very weak. After making a peak E in the weekly chart, we are still long from 110s. It did hit 122, and now it's trading at 118. I think it's starting to pull back, and it's how some of these sectors start to react and act as if and when the general market, starts to pull back decisively. BX is Blackstone, I believe. Is that right? The Blackstone Group trading really nicely up. Leg B in the daily. Leg D was made in the weekly chart in a cup formation. It's one that I'd followed, and then I kind of let it go for some reason. I haven't been following it. It is acting very well. It is under the all-time high. Yes, if you own it, I just keep holding it. If you don't own it, this is a little tough because it's at 36.68 all-time high. Is that an all-time high? Was it 37.52? I believe so. Because yes, all-time high was back in 2015. No, this is tough. Looking out, I think Blackstone Group will be a participant in a major move up. Would I start a position more as an experiment than anything else at 36.67? I'd say yes. I'd do that with maybe a 1.5 to 2 point stop And I'll tell you why. Because at 2 points, if it goes to 35.23 is the 9-period moving average support that it hit the other day, it's holding very nice. And it's got this I was going to say, it's got a cup formation, could be a cup and a handle formation, or if it breaks into the 38s at any point, that could be a Chapman wave cup and ladle breakout pattern, which would be very positive. So I'm just saying, looking out, I think it's a fabulous stock. Short term, if you want to nibble on it at 36.68 with a 1.5 maybe stop, I'd say, yeah, I'd do that. More as an experiment.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
So, yeah, don't forget, you got Steve coming up, Dave coming up, Tom O'Brien coming up, and the long weekend. You might want to check out my opening call over the weekend. This is what I'm looking at here. The advanced micro devices hit 34.14 yesterday. Huge leg D in the weekly, huge leg. I just have to call it an F for now in the monthly chart, but the technicals are still very good. So you could, it's either F or an A. to mix the two is amazing that you can. F is negative, very negative. A is fantastically positive. So I don't have to even look at it right now. I'm looking at the daily, and the daily says the MACD is still strong. The stochastic is at 89%. I would not be surprised if this is going to turn into, it's almost like a Chapman wave. Let me see, maybe it is. 29.94, 29, I think 29.93. It's almost like it has the characteristic of an instant restart, or this Chapman wave pattern that says it should go to an F. And if it goes to an F, there's a chance that it'll be an F/C in F/C. But it could, in fact, recycle a little bit higher. So I don't want to be talking about it as if it's very negative. It is. The technicals are very strong in advanced micro devices at 32.29, up $1.82. And until it cracks 28 support and starts to trade in the 27.50s, I have to consider that so far it's still positive. This is one of those cases where I don't really want to be predictive. I want to look at it and say, okay, now you've shown me that there's a downturn coming, short term, weekly chart, extended, but still a leg D and looking good. Question I had about Intel. You know, Intel, I've always had a tough time with Intel because it seems to me to be a laggard, and then it comes on strong. And that's exactly what happened when it went to the high of June, was it? June of this year at 57.60. Now it's trading at 45.45. Question is this a time to add to it? That's one question. The other one says, is this a sell mode? Yeah, it is in a sell mode in the daily and the weekly chart, and the monthly is probably going to give a sell signal. But I don't think I would do anything with it. I don't think I'd short it right now. I definitely wouldn't be a buyer. Stay tuned for Steve. Have a great weekend, and check out my opening call. Have a great weekend. I'll see you on Monday.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.